Good morning and welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at BackupBradley. It's not on the screen above, but we're going to get it fixed today. I just want to make this video. We are making some changes, rebranding the show. We've changed the format a little bit here on the show, and I wanted to change the name to accommodate that. So we're going to make some intro changes and things like that to really freshen things up. So appreciate you guys staying with us on that. We just crossed 17,000 subscribers. Digital Perspectives. Loving the new name. Okay, guys, and by the way, I have a podcast out as well called Digital Perspectives. Make sure you check that out for all the episodes that we have. So we're going to cover some older news and some current news, and we're going to tie it all in because it really helps us see, I believe, a more clearer picture. And clearer is the word. In fact, the word really is clarity. I remind everybody that yesterday we did a video where we touched on the Ripple drops where Michelle Bond and Chris Larson really reinforced the notion that they need clarity more than more rules. Clarity about what the space is and clarity about what the assets really are, including XRP. I believe the things that we're going to look at today and what we've looked at about a month and a half ago do exactly that. So if you remember a month and a half ago, back May 15th, we covered the Consumer Financial Protection Bureau and the post from Stuart Alderati. And it was interesting because that led us down a rabbit hole. And then in conjunction, XRP Crypto Wolf did a great job going through that document, finding all the relevant places that it discussed Ripple and the use of XRP from the Consumer Financial Protection Bureau. And basically, the document really sets up a new set of regulations and understanding and clarity about the use of a third-party asset and a company outside of the banking sector for remittances, and as well as other things, but just keeping it defined. So I want to show that this article came out again, refreshing this notion. This is from BTC Wires, and this is about the document that we covered back in May. But the clearer picture here for me is that it's relevant because July 21st, 2020, these rules in the Consumer Financial Protection Bureau PDF, which I will post in the comment section below, become effective. And it essentially does allow the use and settlement with Ripple, the company, and XRP, the token. So we will see what takes place from that. But what I want to do right now is take you, because this is the actual document itself. Now, breathe a sigh of relief. I'm not going to take you through that, okay? But I do want to let you know that, to let you know the enormity of this document, I mean, they give examples of the relationship between the USD and the peso as an example, which I find extremely important reference, because we know MoneyGram started settling with XRP in the USD peso corridor for Mexican peso. So I just found that to be really relevant, as well as they define the use of Ripple and XRP, and I believe bring clarity not only to the asset but to the liability risk and issue that exists for that 3 to 4 seconds that it's on their payment rails with that asset. Okay, now I want to also say that the size and scope of what we're talking about here is on page 8 in the 80s, like 81, 80 through 85, 86. They heavily go into the discussion between ACH settlement and the collaboration with the EFTA, which is the European Free Trade Association. I mean, it's pretty remarkable the extent of what we're actually talking about here. And again, it feels like ground rules. It feels like clarity. One could even say it feels like the framework to a regulatory sandbox. Now, I know that there's more than one agency, especially in the United States, that overlap and intertwine. But again, we covered this in May, and I just want to highlight that it does feel like it's very relevant because of some other things that we're going to talk about here in a second. So European Free Trade Association is definitely incorporated into that document. Here's the video that we had that we covered this. I just want to let a few minutes of this video play out here so you get the full scope of what's covered in the document. And I don't think I can really do it any better than it was, when we did it back in May when the document came out. So let's listen to a few minutes of this, and then we're going to get into some current information that I believe really sets off the notion and the tone that not only are we headed in the right direction, we're really starting to get the clarity we need from those many different agencies. So here we go. Is that we have had many conversations here about the liability issue because this is a new technology and new protocols. We've had many conversations about the liability issue, about that payment rail, where you have 3 to 4 seconds that between the sender and the receiver, that this money exchange of transaction and settlement is happening on a new innovation and new tech. And I feel like this is one step closer to defining that and having another government agency giving a nod, if you will, to move forward, and it looks like a solution to the new financial system. Now let's take a look at this, because this is the actual PDF that he shared, and there's many times that Ripple is mentioned in here. I want to focus on this particular one that talks about SWIFT and how it could work together here. Let me just read through this really quickly. The Bureau has continued to monitor the remittance transfer market since the publication of the assessment report and observes that most of these developments continue to progress. Examples include the continued growth and expanding functionality of SWIFT, Global Payment Innovation tracking product, which can increase the amount of upfront information available to sending institutions, and the expansion of major payment card networks. Capacity to support cross-border payments, the continued growth of FinTec, non-bank remittance transfer providers, and their further expansion into partnerships and other relationships with banks and credit unions, which allow such entities to tap into the closed network payment system that non-bank remittance transfer providers have developed. 3. The continued growth and expanding partnership of virtual currency companies such as Ripple, which offer both a payment messaging platform to support cross-border money transfers, as well as a virtual currency XRP, which can be used to effect settlement of those transfers. Now, moving over here, we get to some highlights of this brought to us by Crypto Wolf, XRP Crypto Wolf. Thank you. All right, let's take a look at this real quick. So this is the front of the document, Bureau of Consumer Financial Protection. And here they have remittance transfer under the Electronic Fund Transfer Act. This rule is effective July 21st, 2020. Now let's keep moving through the information here. Thousands of financial institutions worldwide could receive remittance transfers, with new financial institutions being added to the network or leaving the market on a regular basis. If, as noted above, the different approaches described above share the similarity of replicating some element of a closed network payment system, the approaches likely would need to enroll all or most of the financial institutions into their platforms to offer banks and credit unions upfront certainty when sending transfers, for which they currently rely on temporary exception. It may be costly, excessively time-consuming, or otherwise difficult to enroll all or even most of these institutions, especially the smaller ones. Accordingly, the Bureau proposed in 2019 to provide tailored permanent exceptions that would allow insured institutions to estimate, as applicable, the exchange rate, covered third-party fees, and other disclosure information impacted by the estimation of those amounts, to address compliance challenges that insured institutions may face in certain circumstances upon the expiration of temporary exception, and to preserve consumers' access to certain remittance transfers. Comments received below, and basically what this is laying out is exactly what I just talked to you about. This is really trying to define how this would be looked at between the institutions that are already settling and making payments if you bring in a electronic settlement to this particular situation, which they're going to do. These developments suggest that in the future there may be means by which banks and credit unions could reduce their reliance on estimates, but there are limits on the degree to which the developments can solve the problem. All of the developments apply elements of a closed network payment system to cross-border money transfer sent by banks and credit unions. As discussed in Part 2 above, in a closed network payment system, a single entity generally exerts a high degree of end-to-end control over a transaction. This control generally facilitates standardization and uniformity over terms, conditions, and processes to which participants in a closed network payment system must adhere. The standardization and uniformity in turn can provide a great deal of certainty to all participants in such a system as to terms and conditions that will apply to individual transactions within that system. To the degree banks and credit unions increase their reliance on closed network payment systems for sending remittance transfers and other cross-border money transfers, the Bureau notes that this could result in greater standardization and ease by which sending institutions can know exact covered third-party fees and exchange rates. The Bureau also believes that expanded adoption of SWIFT's GPI product or Ripple's suite of products could similarly allow banks and credit unions to know the exact final amount the recipient and remittance transfers will receive before they are sent. Now, I have to tell you, this is the consumer protection, let me get the proper name here again. I just want to make sure. Enforcement. It's the Consumer Financial Protection Bureau. Had to help myself out on that one. Okay, but we get the gist of it, right? There's all the different places it's in there. And shout out again to Crypto Wolf for that amazing research back then, and Stuart Alderati for sharing that document back in May. So that was back in May, and it's kicked up again, like I said, in this most recent article here, where it talks about this because, and I think the reason that it's done that is because these rules that they've discussed and laid out in this document go effective July 21st, 2020. So in about another 3 weeks or 2.5 weeks here. So this is interesting. But what I really want to tie this into is a couple more things here. One is the recent tone and article and discussion that Brian Brooks has really been sending as a narrative here from the head of the OCC, the Office of Comptroller of Currency, where he's talked about releasing a federal charter that will help virtual asset service providers to where they can apply for the federal charter and not this state-to-state 50-state licenses, which most of them, quite honestly, cannot afford to even take on. So that is amazing. Two other elements of this that are really phenomenal is that this federal charter will allow those virtual asset service providers to, in fact, engage and work with the Fed. See clarity, right? We're seeing the clarity, and not just clarity for the asset XRP as a designation or definition, but what I'm seeing here is clarity of a regulatory framework or a regulatory sandbox. They are opening the doors and kicking down the barriers to allow this to happen, is what I see. The other thing that is amazing here, too, is in this federal charter, it will also be possible for those companies to be able to get and be protected by FDIC, so they'll be federally insured. That is a remarkable moment as well. Legitimacy. As you move into this regulatory and sandbox environment that I'm seeing, and that's what I'm kind of crowning this moment and these accomplishments and motions that are going forward, looks like a regulatory framework for a sandbox here. They're going to provide the protection for these companies as well, which is going to drive consumers and businesses to use them because of that as well. So pretty interesting stuff there. One more thing I wanted to tie in here, which is coming back to this. Let me refresh my page here, because I want to remind everybody also that we recently saw, and here's XRP Joker sharing this, which is a new narrative from BIS, which is Benoit Courier and Augustin Carstens, right? And this is interesting because there's a new narrative that's springing out about faster payments and CBDCs to be implemented, new central bank faster payment infrastructure regulation because we need a level playing field. Now that's interesting. Now I'm not going to play I'm not going to play this, but I just wanted to highlight that again. And then I also covered yesterday, which is really, really important to note, and this will not go away from me. I gotta be honest. I mean, this is one of those things that just keeps bugging me, but in the best way, right? And that is the new relationship between BIS, and I'm going to find the post here in a second from Jim Rickards here. And if I don't find it on my thread, I will absolutely go to his thread and find it, because I know I will. But, you know, this relationship that's been created now with innovation and FinTech between the Bank of International Settlements and the Federal Reserve out of New York. This is really one of those things that just kind of excites me in a way, because I feel like we are on to this path. I mean, everything that we've just discussed combined with everything that we're seeing, and I guess I've gone by. No, here it is right here. So wonderful. So the BIS is a reminder to tie all of this in. Here we have the Consumer Financial Protection Bureau. We have Brian Brooks from the OCC talking about putting together a federal charter that's going to allow these companies to work with the Fed, engage the Fed, at the very least, and then provide FDIC protection to the companies, driving obviously more business and consumer use to these new companies. And then you see Jim Rickards here talk about the BIS Innovation Hub is pleased to announce strategic partnership with the Federal Reserve New York Fed to further development of FinTech initiatives for the global financial system. What else do we need to know, guys? What else do we need to know? I don't know. One thing I do want to share with you, though, before I forget, is that Link2 is actually selling Ripple stock. And, you know, I'm not a financial advisor, but I know one thing. I think to myself, well, isn't this interesting? Because I start looking at all of these things and I start asking myself, who else were they talking about in that document? Yeah, so that does it. And Uphold, blockchain co-investors, Robinhood, and Link2 stock itself. So pretty amazing stuff. You know that Ripple's selling stock right now, and you can get some if you're interested. And Uphold's just recently started too, and it looks like Coinbase as well. So this is, to me, when I look at this and see how the space is growing, it's obvious to me, and it's my personal opinion, it's not advice, but you know, it's obvious to me where things are headed, and they're headed in a massive way. We are moving into the new .com era of the crypto space, right? It isn't going to be long before we start seeing the actual IPOs. If they're pre-IPOing at this point, it isn't going to be much longer. We're going to start seeing the companies fully on IPO publicly, and what an exciting moment that will be for the blockchain and crypto space. All right, guys, that's going to do it for me. Make sure you hit the like and subscribe, and I'll catch you guys on the next one. Take care.